I started trading Bitcoin at $22,500 thinking it was going to go up to $25,000 a coin. I thought this because there was a lot of chatter about the psychological barrier at 25,000. There's this resistance that people were talking all over the internet, and the kids on Twitter were talking about a support level at 22,000 so that we would be trading sideways in this channel for a little bit. My lizard brain is thinking that I'm going to buy support at $22,000 and I'm going to trade when it hits $25,000, and I had some strong conviction on that move. Sweet, I said, I'll make a couple $1,000s. And it did. But I did not capitalize fully on this opportunity. Instead, this is a story of how I tried to trade, missed out, and made $600 on a $10,000 investment. It's not that good. So I bought $10,000 worth of Bitcoin. This was worth about 0.44 BTC, and I bought this on February 8. But then I got all in my head. All those doubts and fears started to creep in like little cockroaches. And I abandoned my strong belief of a $25,000 Bitcoin. And I decided to instead do what everyone else says to do and DCA into selling my position. And as it went up, I DCA'd out of it, dollar cost average. Here you see I sold 0.1 of a Bitcoin, making $2,390 on February 15. I sold another 0.1 of a Bitcoin, making $2,435 on February 16. And now in hindsight here, I should have sold it all. But again, I changed my mind and I thought, you know, Aaron, do the smart thing and DCA because I didn't know if it was going to go higher or lower from here. Because my previous belief was that 25,000, it's going to hit resistance and come shooting back down. I should have sold it all. I doubted myself, as we all do in trading. So it came down a little bit and I sold another 0.1 of a Bitcoin, making $2,337 on February 17. And another 0.1 of a Bitcoin, making $2,484 on February 19. All of this added up is $9,646, and I still have 0.04 of a Bitcoin left, worth at its current market rate $950, which brings me to a total of $10,596. The majority of it is in stablecoin. So I have about $600 in profit if I sold today. Now, my best guess is probably I spent 2% in trading fees on DeFi. So that's about $200 in fees. And because it's in DeFi, I made probably realistically about $400. And I have one big takeaway for you and for me. It is much better to buy and hold Bitcoin rather than playing this crazy game that I just decided to play over the last month. The risk reward was terrible, okay? I put up $10,000. I made $400 within probably about 3 weeks. I was glued to my phone on the charts. I was anxious. I was worried. My heart was palpitating. It's just no way to live. I think it's just better to buy and hold and believe in Bitcoin, especially if you even want to go into the alts. Historically, we have seen Bitcoin pop off, then that money rotate out of Bitcoin into the alts. So if you are in Bitcoin, there's two big reasons if you're going to trade in Bitcoin. So there's a very good reason to buy Bitcoin now and not other alts, is because when you're in Bitcoin, that Bitcoin will shoot off first, then you buy into your alts, because historically that's what's happened. For myself, I don't know if this is right or not, and this is not financial advice, this is what I'm going to do. I'm going to buy into Bitcoin. I'm going to dollar cost average as it goes down and buy more. So I'm not going to buy my whole bag. And when it does shoot off, I'm going to sell 50% of that bag and then rotate that money into altcoins, because I don't know if Bitcoin will ride up even more. The good thing is that you're in Bitcoin. You're not in any other altcoin. If crypto is gone, that means Bitcoin is gone. Bitcoin is the cornerstone, the mainstay for crypto. So if you believe in crypto as a future asset class, then you need to believe in Bitcoin. But as far as trading goes, it's a terrible lifestyle. I got a family, I got a full-time job, I got all kinds of stuff that I got to take care of. I don't have time to be worried about what's happening on my phone with these charts. I did it because I was bored. Maybe I wanted to make content for you. I wanted to see if I could do that. I wanted to see if I could end up positive while I was trading. So I did, been there, done that. Too hard, too hard. And maybe it's because I thought I had more control over the emotions that I have, but obviously that's not the case, because if I would have sold at my conviction levels, then I would have made actually a couple $1,000s. Maybe that would have been worth it. I had a conviction of a $25,000 Bitcoin and resistance at that. So if I would have held to that point and sold it all there, I would have really made a couple $1,000. But I guess that's why people use bots, and they use all these different techniques and technology to trade. is because they want to take the emotion out of it. So I am a complete novice at trading. Honestly, this is like full disclosure. This is not a way like some kind of tutorial high level so that you're learning. This is just my journey into crypto. I'm still continuing on this journey. I may have been in it for about 2 years now, but I'm still a novice when it comes to a lot of aspects in crypto. But I think my instincts were right, so I just need to have more conviction in those instincts. So my future predictions for this market, I think it's all bad for 2023. I think you have rising payments in cars, in houses, you have rising debt, you don't have the income to match it, you have rising inflation, you have wild cards like the war in Ukraine and Russia and all this kind of craziness. If I look back on crypto, I think it was rocked heavily by these massive giants of crypto, these industry staples just all folding like dominoes, but I don't think we've seen that in the real world. I think it's bound to happen in real world assets like these banks or whatever, but I think just crypto was the first to go because it's risk on asset, it's just highly volatile. So if I'm looking at the macroeconomic environment, I just still think that there's more pain involved, especially for the American household. And I don't know about the rest of the world, but I would assume that it's bad around the world as well. And I still hold to my core convictions that there are 3 things that's going to turn around this bear market. And that's number 1 is regulation coming in. If the United States starts setting up real regulation, especially from the XRP case, then maybe we'll see some cash inflowing from these big sovereign wealth funds, big hedge funds, big money. Number 2 is the Bitcoin halving. The halving is scheduled to be around early next year. They don't have an exact date for that yet, but as it comes closer, I think people will be more exciting for this Bitcoin halving, and that has historically seen Bitcoin pop off and taking the crypto market with it. And number 3 is the Fed U-turn. Right now, the United States Federal Reserve, which is not federal, not United States, and not a reserve. There's nothing reserved at that place. I think they are tightening. Well, I know they're tightening everything up. So once they start easing, once they start printing money again for more money to circulate, I think that's when we start to see a U-turn. Let me know your thoughts on where the market is going and more importantly, why. And what do you think about playing these trading games with the market and with Bitcoin, and is it worth it? Are there any TA specialists out there who are actually doing it right? I know they have their calls and stuff, but are people actually making money from it? I'm just curious. Thanks so much for watching. Hit subscribe, like, share, and I'll see you in the next video.